Hello everyone. Welcome to another price review today on the euro dollar. Um, the key important subjects matter of this focus will be based off on the um, scope of your risk to reward and order flow. So I understand, or I would like you to understand that whenever you're trading in line with the order flow, you're at more favorable edge, or let's say you are more on the right place of the market than trading against the order flow. So this is euro dollar for now. We have been very we've been chopping around right about this whole consolidation for some weeks right now. We've just been going up, going down, killing both sides, going consolidating, killing up. We've just been battling in this level. But in this kind of situation, sometimes I stop the market, sometimes I just look at the market and then I just study. So what I'm actually just trying to explain to you just about the entry I took today and what you can actually learn from it. So going up to the daily time frame, I'll also start from the daily time frame. So today is Monday. This is Monday. We traded high, and then we started trading lower. So and then this was the highest point to reach. So the first thing I would like to do now is to mark this. We traded high. So go down to a 4-hour chart. Okay. So this was the Monday's high, this relative equal high, which would act as drawn liquidity soon. But we're not really concerned about that now. So this high, and then this is Monday. So we traded down. So dropping down to a 1-hour chart. What I'll be talking about today is just my entry type, because I took a trade today on demo account. I wasn't even prepared to take on my Profem account or on my funded account. Now I don't really want to take that kind of risk, because trading this kind of consolidating market, you might not see everything at once. You might just see something, it might go against you, it might start going, it's not very much in your favor when trading this kind of market. So I decided to stay on the environment of my paper trading account on my demo and just test a few stuff out. So this is what I was trading today. Now, this being the high, I saw the market dropped down, traded back up. Okay, then we dropped down immensely. We saw this low as a target, and then we traded down through it. Now, after trading through that, we came into this area about there was a fair value gap on the 5-minute lower time frame, but on the 1-hour time frame, I like to take this whole range, take out my Fibonacci, draw this whole week. This whole week right about, and then I project the mean threshold of that. Okay, the 50% mean threshold, or you can call it consequent improvement. Now, after that, I saw this rejection here, and then I was looking for why did it reject here. Was something here, was living here that I'm not able to see, and then I projected the mean threshold and then gave this price, and then I dropped down to a 15-minute chart. My execution today was just based off on the 15-minute chart. It was a 1 to 3 risk to reward trade, beautiful trade. And then I saw, as on the 15-minute time frame, I saw this fair value gap. Okay, so I saw this inefficiency. This inefficiency in itself is a BC, a buy side inefficiency, sell side imbalance, which means price was only offered on the buy side. But we can actually clearly see that price has been dabbling in this fair value gap, came back, went up, came again, traded up, came, touched a little bit, went up. Like, I don't really like this. This fair value gap has been used a lot. Like, this whole price action here should be filled. Came back, went up, came again, went up, came back again, went up. So to me, I think this whole price level has been filled to the brim. Like, I don't know why it's literally just coming back into it and respecting it over and over again. But that wasn't my focus. My focus was looking at the day order flow and what am I actually targeting. So this from the Monday's high, we also have this relative equal highs liquidity. When we traded back down, I didn't really take this wholesale trade because I wasn't really confident about that. So when we traded back down, we saw a shift in market structure from this low, and majorly from this low, from shifting market structure from this one. Okay, so after I saw that, My idea was based off on the fact that okay, I would like to sell, I would like to go in line with order flow, because this on the daily was like a bearish order flow, and we have a shift in market structure here and also here. So where would I like to sell? So this was where I targeted. I just placed my shift in market structure right about there. So when we took out this low, traded down, went up. This was a fake out, and then it's brought in buyers and then dipped them back in. So this also was like 3 a.m. Yeah, this is the London Open. So this is the Monday London Open. I'm using the New York time zone. So this is, you always want to have your time on the New York. So this is the New York time zone. So we actually are like this low. So we had a shift in market structure. After a shift in market structure, I was looking for where again can I buy off a sell off a position. Now when the market traded down, respected this same level, it has been bouncing up and down on. I was like, okay, I'm going to still sell, but here's the tricky part. Now, whenever I see the market consolidating in this manner, I always like to just target like a 1 to 3 or 1 to 2 risk to reward. Sometimes a 1 to 4, but today I only targeted a 1 to 3 risk to reward, and that was it. It was nice trade and was beautifully executed. Although I took partials, on a 1 to 2 risk to reward, I was knocked out of the trade. And I just kept looking at the trade, and eventually went for a 1 to 3, but it was a beautiful trade anyway in the consolidating market. So the key importance was that we had this daily, this London high, we had this Monday high, traded down, changed, shifted the structure, went back up for low risk sell, and then we traded back down again, shifting market structure, and then now this is where it gets good. I was looking to take a buy position from this level, but I missed it. So I was waiting for the market to drop down into this fair value gap for me to target just a 1 to 2 risk reward or 1 to 3. And this was my plan initially, that when the market drops down into this fair value gap, then I would have done this. I would have went long. Sorry about that. I would have went long in this manner. Then I would have just targeted like a 1 to 2 risk reward. Yeah, this was what I was planning to do. Nothing more, just a 1 to 2 risk reward, take my profit and I'm out for the day. But this was going to be my trade plan for the day, but I didn't really get that. So when the market kept buying, leaving me behind, didn't give me this opportunity, I was like, all right, so since I didn't get this opportunity, initially I was looking to buy this move and then short the move again. So that was what I was hoping. I was hoping to buy it from here, take it to like a premium array, and then short it below this level. But it didn't really give me that. It just left this gap open and vaulted higher, and then I don't know, it left me. I didn't take the trade. But since I missed that trade, I looked for another trade. So the second trade was based upon the fact that we shifted structure here, lower time frame shifting structure. Now, lower time frame shifting structure doesn't necessarily mean there's a shift in structure in the higher time frame. Now, this is a lower time frame shift in structure, a lower time frame shift in order flow. Now, this is where my focus is at about now, from just this price level. Okay, from the Sunday midnight. Yeah, this was my order flow for the day. From this level like this, we had a bearish order flow just for the day, and then I was looking for what's happening. All right, now the most important thing was that I traded in the New York session. I love trading the New York session the most. I don't really care about London session more, because London session gets to tell me the narrative where I'm going to trade. So the New York session, I saw that okay, London session had a shift in market structure below the London Open, and then we'll trade it down. Okay, understand, I'm going to repeat this for you to get it very, very clear. This whole order flow, my trading focus for today was based up on just a single candle, not an entire move. I wasn't really concerned about this whole shenanigans and dance move right about it. It was just based off on what I was seeing at the moment, what my mind was focusing more at the moment. So this for me is like a bearish order flow. You can call it a bearish trend, I don't know, but it was just a bearish order flow for the day. So when I saw this whole impulsive sell move down, I was waiting for when New York is going to come into like a premium to give me another sell again into like a discount. Good. So when price traded down and I missed the buy here, and it went up, I was looking for where I was going to sell. So potentially I headed up to a 1 hour chart. I was looking for, okay, where is it going to sell? So I quickly picked this was the Monday. This is the London Open. This kind of right about here. So from this low being 5 a.m. the New York time, good. So from this level to this level, a lot would have happened here, which my eyes are not clearly seeing. So what did I do? I hopped on the 30 minutes chart to like get a clearer view. So this is what I do. I go from the 1 hour to the 30 minutes. So now on the 30 minutes chart, it was clear, it was plain, it was very good. Now, when I had this impulsive sell down, we took out this low. We had a shift in market structure here. We had a shift in market structure there. Good. After that, I waited because I missed the bar here. I was waiting also, like I said, I missed the buy, the second buy here, like a short low risk buy. I missed it there. And then I was looking for my sell because the order flow for me for the day, since I saw this impulsive moves, was a very short flow. So I quickly picked out the first fair value gap before the impulsive move to the downside. We took out the London Open. Good. So when I saw my fair value gap, this was my fair value gap. And one thing I always like to do, I don't like taking my entries, my executions from the fair value gap. Now I have this bearish shadow block right about here. The last sell candle before the impulsive move to the downside. Good, which caused a shift in market structure. So after seeing that, I was like, okay, good. So I have everything I need. Okay, let me align them. I have a shift in market structure. Okay, shift in market structure. Good, which turns out to be bearish for the day. Like I said, it's just a daily time frame, a lower time frame order flow. Then I have my bearish shadow block. Okay, bearish shadow block. Good. And also, sorry, I think I got to put an R there. I have my bearish shadow block, and also I have my impulsive move. Fuck. Okay, impulsive move, which turns out to be sell, which turns out to be bearish. So everything I'm going to be doing falls within the line of these structures. So I have my shift to market structure, the London Open, good. Now my bearish shadow block, I don't like taking a trade from the fair value gap instantly because sometimes they want to push it higher a little bit. So I like to take, since this is my bearish shadow block, I like to take it from the close of the bearish shadow block, which turns out to be the London 830 closing price. So this right here is my bearish shadow block, so I like to take my entries from there. That's where I like to take my entry. If I miss it, it's fine. I don't really care. I wait for another setup, I wait for another opportunity. And also, I have this bearish shadow block right about here. I have a bearish mitigation block right about here. I have a fair value gap. Good. So most of the times when I get to take a trade on the fair value gap and they put my stop loss here, it's somehow risky. I don't really like it personally for me because this is what I'm talking about. So take fair value gap, put my stop loss right here. Target 1 to 2. Yeah, I don't really like to trade in this way. I like to wait for the price for market to, because the volume is more from on the body, and this is my bearish shadow block. I have my bearish breaker. If I draw this out in time, good. So I like taking my entries on the bearish shadow block. Clearly, this was the bearish shadow block, the bearish breaker. Yeah, the low. Tap the low of it close to the body. I don't really care. I wasn't looking at that bearish breaker though. I was looking at the bearish shadow block. This kind of red bar here. I have my fair value gap. I have my shift to market structure, and also for an optimal trading entry. Now, this was another criteria. Is the trade falling under an OTE? Now, an OTE is a situation whereby I like to use the Fibonacci for like if I'm selling on premium or if I'm buying on discount. So when I draw my Fibonacci from this high down to this low, I look at what I'm selling at 72 deep discount level. So I have my OTE, I have my shift to market structure, I have my bearish shadow block, I have my impulsive move. Good. 4 criteria met, and that was it. And I placed my SL about here for a good 1 to 3. So why did I place my take profit right about here? Now the reason was because, as we said earlier, on the 15-minute time frame, I had this inefficiency. Now this inefficiency right about here means that it's probably it's gonna act crazy. So I don't really like trading a crazy market whereby I'm in profit and then the market starts dripping and coming against me. So I just decided to take for a 1 to 3 good. And something I think it's about like a 6 handle move or 5 handle move, 19 pips, somewhere about that profit. And I'm good with that. I'm satisfied for the day. It was a good trade. Every criteria was met. My shift to market structure and a bearish block, and also impulsive move and the bearish breaker, and an optimal trade entry from 72% retracement level. So this right here is a sweet trade setup. Like everything is just met. You have every criteria met in this level. Note, I'm not talking about the noise to the utmost left. I'm talking about this with this order flow, and it was just nice delivering price. And I had to take profit on my demo. I demo trade this. I was going to trade on my live account, but I wasn't like really ready to do that because Monday and today is the Martin Luther King holiday, so I just had to see it. So according to my first initial setup, which I had like on this fair value gap, I wanted to trade it, but I'm sticking to the rule whereby I take one setup for the day, and this would have given me probably like, well, I had a target of like a 1 to 2. I would place my stop loss here, and then a 1 to 2 risk to reward would have been nice. It would have been somehow good for the day, risking 1% to make 2% of the trade. So that's about it for the day. And if you have any questions, you can comment on the chat. I will respond to everything. So the takeaway from the trade was that the takeaway from the trade is just trade like a 1 to 3 or like a 1 to 2. You're good with that. You don't really need much about going on the market and then start trying to catch all the moves. You don't really need that. And besides, we've been trading bad for the past week. We've been chopping up and down, killing both sides, taking liquidity. I don't really understand what's doing, but this right here is a good order flow for me, and it was a nice delivering price. And see you guys in the next video, and have a wonderful evening. Wherever you are, it may be morning, but over here it's evening, so have a wonderful evening.